The one emotion destroying your investments. What if I told you that the biggest threat to your investment portfolio isn't inflation, market crashes, or bad stock picks? It's an emotion you feel almost every day, and most people don't even realize it's making their financial decisions for them. Stay with me, because once you recognize it, you'll never look at investing the same way again. Today, we're talking about fear, the quiet emotion that has cost ordinary investors more wealth than almost anything else. Fear isn't a weakness, it's part of how your brain keeps you alive. Thousands of years ago, fear helped humans escape predators. But in today's financial markets, that same survival instinct often convinces us to run away from opportunity. Imagine checking your portfolio after a rough week. The market is down, headlines predict disaster, and social media is filled with panic. Your heart races, your palms sweat, and suddenly selling feels like the safest option. The problem? The market doesn't reward comfort, it rewards patience. History has repeated this lesson countless times. During major market downturns, many investors sold near the bottom because fear convinced them things would only get worse. Yet, as the economy recovered, those who stayed invested often benefited from the rebound. Fear rarely whispers, "Wait." It almost always screams, "Get out now." Behavioral finance calls this loss aversion. Studies show that losing money hurts us psychologically about twice as much as gaining the same amount feels good. That's why a temporary 10% decline can feel unbearable, even when your long-term investment plan hasn't changed. Social media makes this even harder. Every dramatic headline, every prediction of economic collapse, and every viral success story fuels emotional decision-making. Before long, you're comparing your journey to someone else's highlight reel and abandoning your own strategy. Successful investors aren't fearless. They simply recognize fear without letting it take control. They build clear investment plans, diversify their portfolios, automate contributions, and remind themselves that volatility is the price of long-term growth. Instead of reacting to emotions, they rely on discipline. So the next time the market falls, ask yourself one simple question. Am I making this decision based on facts or based on fear? That single pause could save you years of regret and thousands in missed opportunities. Remember, wealth isn't built by predicting every market move. It's built by mastering the emotions that try to predict them for you. If this changed the way you think about investing, let me know in the comments. What's the biggest emotion you've had to overcome as an investor? And if you're fascinated by the psychology behind building lasting wealth, subscribe and join me for the next conversation.